This is All India Radio. In the program Money Talk, now we bring you a discussion on resilience of Indian banking system. The participants are Bikash Mishra, Senior Advisor, Indian Bank Association, and Anubha Rohatgi, AIR Correspondent.
The reverberations from the collapse of US-based commercial banks, Silicon Valley Bank and Signature Bank, in the last few days are being felt the world over, impacting financial markets as well as the depositors and companies associated with them. While the global effects of the crisis are still emerging, a question weighing on everybody's mind was if its after effects will be felt here in India and will it impact the Indian banking system as well. However, analysts believe that the Indian banking system seems to be well capitalized and relatively more resilient. And to discuss more about the issue of resilience of Indian banking system, we are joined by Mr. Bikash Mishra, Senior Advisor, Indian Banking Association. Mr. Mishra, global economies are intertwined today, of course, and a crisis anywhere in the world, especially in the world's largest economy, has a ripple effect almost everywhere. Amid all this gloom and doom in global markets, analysts have reposed faith in the Indian banking system and its resilience, saying that a major impact is unlikely. What, according to you, are the reasons for this?
We are living in a global entity now, and anything that happens in one part of the globe will have some repercussions in the other parts, and that too when it is, as you rightly said, it is happened in US. But then we go by the business model. The kind of business model this Silicon Valley Bank, 40 years old. We don't have that kind of business model in our country. And they were lending, basically they were the banker for the startups, both for lending and the startups were parking their deposits also with them. And they were known for that. And SBV, Silicon Valley Bank, it doesn't have much presence overseas, including in India. So the effects will be limited to the, parking of some of the Indian startups with them. And apart from that, I don't think that there is any other reason as to why it will have any kind of effect in the Indian banking system. And Indian banking system, as you see, both before independence and after independence, so there have been bank failures in India also. But then it has been taken care of by the regulator and the government together. And we have now the DICGC claims, what you call if some bank fails for whatever reasons, then we have the backup for the DICGC claim, which is now the amount we started with, I think, some 1,500 rupees in 1961 or so. Now it is 5 lakhs rupees. So the depositors absolutely, even if in any of the banks in the country, number one, it has not happened. If at all something happens also, we have this backup of 5 lakhs rupees, which is 3.1 time of the per capita income. The Indian in US terms, and which is by and large it is almost similar to what the US has. US, they have $250,000 the insurance backup, which is 3.6 times of their per capita income. Now we are 3.1 times, so it is comparable. And the Indian banks have, there have been moments of turbulence, and we have weathered many storms. I will give you one or two examples. Jan Dhan accounts. Jan Dhan was done in a mission mode. Now we have more than 48 crores accounts, and there is 1.80 trillion rupees is kind of deposits we have in that Jan Dhan accounts. Our UPI, the entire world is appreciative about our UPI initiatives, and we are having transactions to the extent of 8 billion per month. Now it has come to 8 billion per month, and in 9 months period of this financial year, the total number of transactions is 75 billion, and the amount that has been transferred, payment made was to the extent of 125 trillion. We started with a couple of 100 crores only, less than in 2016, and we are all set maybe to end up with 100 billion of UPI transactions this financial year, and maybe the transactions will be over 150 trillion. So these are all, it has no parallels anywhere in the world. So we do have our limitations. Our banks have also failed. Recently also we had crisis in Yes Bank, we had crisis in Lakshmi Vilas Bank, then we had a PMC Bank. But our regulator and government always come together, and they try to safeguard the depositors, and they also try that the business entities are also well protected, so the business has to go on.
You mentioned the regulator, which in this case is, of course, our central bank, the Reserve Bank of India, and you have also mentioned the government. That brings me to my next question, that the health of a banking system is a reflection of the country's economy and also a consequence of the government policies. So in the present scenario, in the backdrop of this crisis that is happening in the US, how well is this system reflected so far as the Indian banking system is concerned and its resilience is concerned?
all the Indian banks are now capitalized, all the public sector banks and most of the private banks are in black. I mean, they are all earning profits. And the, what you call the NPA, which is the bad name, we have come out with the bad bank also for that. So it has come to all-time low in the last 10 years period. So we have learned, because there was some mismatch of asset and liability, we had this problem. Now, for the first time in maybe 10 years' time, all the banks are in profit and the credit growth has picked up. And but there are challenges, in the sense now, because what are the main functions of the bank? We have to mobilize resources from the people who have surplus, and we have to give it to the people who need them for that business purpose. So now there, you have mutual funds, you have other forms of investments. So now there is a competition, and the banks have to be prepared to compete with them and give better services, better interest. Because the beauty of our Indian banking system is that banks depend more than their resources come for more than 60% of the resources come from the households. So what happened in this SBV crisis? Their resources, it is this, what you call the startup, they had their resources, heavily they had invested in SBP, heavily they had lent to the startups. So what happened, if something goes wrong, so then there is a fallout. But in the Indian context, we have the household deposits. 60% of our deposits, Indian banking systems are household. And normally a household we don't change. Suddenly overnight we don't go from the banks to bonds, from bank deposits to the bonds. And so they're sticky. They're stickier. So from resources point of view, absolutely there is no issue. And when it comes to the lending part also, see, our total assets book, all banks put together in India, 65% of the assets books are loans. And only 25% are investment in bonds, and most of them are also in the government bonds. But what has happened in the SBV case is the model is totally different. The loans are less and the investments in bonds are more. And what kind of bonds they have invested in? All the long-term bonds, the mortgage-linked bonds. So we always go for, the regulator in Indian system, we are very particular. You cannot cross this limit. You cannot go beyond this. So they had a free because they had the deposits from the startups who were looking for a higher rate of returns. The market was at that time low and the rate of interest was low. Then came the geopolitical, compulsions. So there was inflation, the bond prices, the yield increased, and they had a liquidity problem because most of their resources were from the corporates kind of things, small startups, and they didn't have the household backups like we had. So they had to make good the liquidity shortfall and they had to sell out their bonds. And they, on one fine day, they ended up with a $2 billion loss. So then the problem started.
Yes, you have very well elaborated on the so-called firewalls, if I can say, the firewalls that have been put up by the regulator, which is the RBI, to safeguard the Indian banks. And you also mentioned the non-performing assets, which have considerably come down in the last few years. What kind of a role, when we're talking about NPA, what kind of a role do you think and how important has been the role of the Insolvency and Bankruptcy Code 2021 in, maintaining the health and safeguarding the Indian banks?
Yeah, the bankruptcy code, we honestly saying, in the post-independence era, we didn't have a strong recovery law, I will say. So it happened for the first time in 2016 when the IBC was done. And, there has to be some element of fear in the minds of the entrepreneurs, the businessmen who do little diversion and they take things for granted. Then what will happen if I don't repay my loan? So once the IBC came, and we had for the first time in the history of banking, we had this strong recovery law. So this is the IBC that disciplined them. And now we had a legacy factor, we had more than 10 trillion rupees book. But now the fresh editions is very less and things are happening smoothly. And we could recover quite a substantial amount of money, which perhaps would not have been possible in the absence of this IBC and bankruptcy code.
The US faced another banking crisis. That was in 2008, the Lehman crisis. And since then, as you also mentioned a little while ago, there have been some banking crises here in India too. So do you think the lessons learned from those crises have helped the Indian banking system to be the way it is today?
See, learning is a continuous process and there is always room for improvement. But you will appreciate that, the Lehman Brothers crisis, the entire world was affected. And I think we were least affected because our fundamentals were strong at that time. Our banks were well capitalized. If I am giving a housing loan, if the cost of the house is the 100 rupees, I'm only giving them 70 or 80 rupees. US, it was, if the cost of the house is 100 rupees, they lent 125 rupees. So that way our fundamentals were much stronger. There was, you need to have more airports, more ports, more roads and fine. But certainly the banks are well equipped. We didn't have the expertise to make lending for this kind of term lending. So something went wrong and we had these problems in 2014 and 15. And in the meantime, we have acquired that expertise also. And then we have the infrastructure institute that has been set up in 2 years back. Then in the budget, there was a provision and NAFED has already started functioning. So it is a combination of so many factors. So all said and done, both from the resources point of view and also from the lending point of view and the recovery point of view, I think we are in one of the finest eras as on date.
Well, you mentioned we were talking about the lessons learned from the past, but every such incident, whether it is the SVB crisis of today, it leads to some learnings for the future as well. And you talked about the improvements. So reforms are also a continuous part, any system, any sector, so to speak. So learnings for the future of what to do, what not to do, how to prevent these from recurring. So what are the lessons for the Indian banks, indeed the banks world over, from the present crisis?
Primary reason as to why the SBB thing happened was their overexposure in the bond market, in the long-term bonds, So there is a temptation on the part of the banks also. In order to earn more, you go for risky investment because, those investments are less risky, your return will be less. So that temptation we have to withstand. It is always better to go safe. Then it is like the share market, you invest in the blue chip companies, maybe you earn less, but your money is safe. So to continue with that, some kind of conservatism is required in banking, in the people project and, what you call earlier conservative things still hold good now also. So learning is a continuous process, not any amount of, technological upgradations, technological innovations or artificial intelligence. These things certainly add to our, what you call, capability to assess the proposals, but the fundamentals, the little bit of conservativeness at the back of our mind should always there. Who is the person behind the project and what has been the track record? And this is the reason why the Indian banks have not lent heavily to the startups. I mean, of course, they are to be encouraged. But then, unless I know a person, unless I have some track record, I cannot play with the public's money. So we have to go slow. And this is one of the reasons that the Indian banks expecting of this kind of fallout in the Indian banking system.
Do you think there are still some areas where reforms are required so far as the Indian banking system is concerned? Some areas which require more work and some more reforms?
Yeah, basically, our public sector banks now from 27 banks 5 years back, now we are 12 banks. And these 12 banks, you have, there are large size bank, you have State Bank of India, you have Canara Bank, in the public sector I'm saying. And there are also small banks like, Central Bank, Bank of Maharashtra kind of thing, public sector space. So I think we may need another round of reform. Let us have, the level playing fields so that, you can compare an apple with an apple. And similarly in the private banks also, you have SDFC, we have ICICI, we have Axis Bank, very large size banks, and we have small traditional private banks also. We are a country of 140 crores people, 1.40 billion, and then there are 640,000 villages also, and we have what you call, I will say, around 25 to 30% of the bank branches are serving 65% of the population in the rural areas for various reasons because of the viability and all. We do need more number of bank branches in the rural and semi-urban area where it is viable, of course, and let that be a level playing field, and the private banks should also contribute in the various government-sponsored programs, which only the public sector banks are doing. It happened in Jan Dhan. It was only public sector bank. 97% of the accounts are opened by public sector banks. Once you are enjoying the ecosystem, once you are having some comfort in the government support and all these things, then we should contribute also towards the nation building, which the public sector banks are known for, and they have been doing it for the last so many years. And the private sector banks also we need because of their expertise in certain area of banking finance, and it is because of their presence after liberalizations, I will say, the public sector banks also become faster in their loan assessment and techno-savviness and all these things. We have to go together. Both public sector banks and private sector banks, they have roles, but the main role should be, to be viable and to contribute towards the nation building.
Mr. Mishra, thank you so much for joining us on the program.
Thank you.
You were listening to a discussion on resilience of Indian banking system. The participants were Bikash, Mishra, Senior Advisor, Indian Bank Association, and Anubha, Rohatgi, AIR Correspondent. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may email your opinion about this program at airnsgtalks@gmail.com.